Hey guys, welcome back to Jesse Invests. I appreciate you guys checking out the channel. Before I dive into this dividend update today, I would love if you could go ahead and hit the like down below, hit subscribe. YouTube tells me over 99% of my watchers are not subscribed. If you guys like the content, if you like getting updates and hearing what's going on, hit that like and sub button down below. It helps me out more than you can ever know. All right, so we are going to dive in and take a look at my M1 account here. I am at $1,796.93. I am up 15%, and that is from $132 in gain with stock prices and $29.19 so far total earned in this account from dividends. First off, I wanted to talk about the state of the market, guys. As you guys may have noticed in the last couple months, especially this last 2 weeks, the market is going down. Everything from ETFs, from the S&P 500 ETFs to schd to consumer stocks, tech stocks, things are sliding down. And this is good to see, in my opinion, because I feel like prices are pretty inflated, and now we're actually getting some fear in the market with interest rates staying high for an extended period of time. I feel like some of these prices are coming down to more realistic buy-in levels, which is great because we want to bring our average costs down if we believe in the company, that we believe it'll go up. So that's what's been going on with the market. So how does that relate to my portfolio here? If we look at VU, which tracks the S&P 500, and we look at the last month, the S&P 500 has slid 3.87%. It has lost about 4% in value in the last month. If we go to my portfolio here, my dividend portfolio, in the last month, I've gone down 2.08%. This means I am beating the S&P 500 in the last month by almost 2%. I have noticed that when we are having downward trends in the market, that my M1 portfolio has a better cushion than the general S&P 500. My portfolio doesn't usually beat the S&P 500 in months of going up, because it's more dividend focused. It's not really built to beat the market. But I have noticed, I think it's because I have a lot of consumer defensive stocks, that when the market goes down, my portfolio doesn't follow along as heavy, which is really nice. It also helps because when I have those dividends coming in, it helps to have something coming in even when the market's going down. So if the share prices are going down, boom, at least dividends help bump it up and cushion it. That also plays a part in helping it cushion. So we're down 2% in the last month since the last video, versus the market down almost 4% in the past month. So that's how we're doing there. Now let's look at what my best performers are versus my worst performers. Let's go ahead and go to all time. We'll go to activity. Holdings. All right, let's look at realize gain. Okay, my all-time best performers in first place with 42% of a gain is Texas Roadhouse. My second best performer of all time is Target, and my third is Caterpillar. Honorable mentions are Costco and SMH. This is very different from last video. I think last time it was Target and SMH in first place, so it's really cool to see Texas Roadhouse and just shoot up, and Caterpillar made it to third. Texas Roadhouse is a beast. I haven't bought a lot recently, but I bought in last year a lot, and it's really cool to see it up so much. My average price is 105, and I'm not sure where we're at right now. We can take a look. The price of the stock is, if my average price is 105, it's at 150. So I got in $105, and now it's 150. That is pretty crazy. Pretty crazy. So let's take a look at what the best three in the last month were. Let's go to my unrealized gain. Okay, I don't know if it'll let me look at the last month. So what we can do here is we can go to portfolio, and then we'll go to last 30 days, my month, and then we'll go to gain and return. So it looks like my best performers in the last month were actually my REITs, industrials, and bonds. So Bonds make sense because the market was on a downhill trend, but REITs surprises me. Let's take a look at that. Okay, yeah, it looks like in the last 30 days, I have gained 2% in O. So O is my leader in the last month, which is ironic because interest rates news was that it was staying up. And my second best gainers in the last month looks like it's John Deere. So John Deere and O are leading the charge in this last month, which is really cool to see. Those are not usually stocks that are in first place for me. So now we're going to look at what I bought this month. Let's go to my activity here. Activity type, let's look at trading only. All right, it looks like I bought on April 1st, I put $56 into SGov. SGov, guys, is treasury bonds. It is 0 to 3 month treasury bonds. Let me pull it up the chart here on Robinhood while I'm here. I really like SGov because your capital is really protected. Take a look at this chart. 0.56% gains in the past 5 years, almost flat. Hardly any movement in the past year. 5 years ago, guys, the stock was at $100.03. Now it's $100.58. The stock does not move. And that is because it is treasury bonds that are being invested in. And in return for that, there's pretty high dividend, I guess you could say. It gets paid out in a dividend, but it is the 30-day yield, which is 5.26. 5% dividend to protect your capital. It's like a money market fund or putting it in a high yield savings account. I love it, and I just like it because I'm able to get that 5% dividend right now. It's a really high payout while keeping that money protected from uptrends and downtrends. So that, that also plays a part in why my account has more of a cushion during these downtrends. I have a decent amount of money in bonds and more stable, safe investments. So I bought $56 in SGov. And then let's see what else we got going on in April. Looks like we had 3 buys and 1 sell on April 11th. All right, so I sold off $22 worth of that SGov. I don't sell much in this portfolio at all, but if I do, it's going to be my bonds. It's almost like a placeholder to get that 5% return until I find a really good opportunity to buy something. I saw that when this downtrend started happening, that O Realty, McDonald's, and Apple looked really cheap versus my buy-in prices. Had a chance to lower my average cost, so I bought $10 of Apple, $10 of McDonald's, and $3.59 worth of O Realty. And looks like that proved pretty well because O Realty is my biggest winner for this month, so it's really cool to get that payoff right away. And then, yeah, so that's what we bought. Not a whole ton, but we bought some SGov and we bought McDonald's, O Realty, and Apple. Then let's look at our dividends for this month. This is what you guys all are here for. Let's see what I got paid. Let's see. We're going to look at trading. We're going to do dividends only. All right. This month has not been too crazy for dividends. My monthly average, I believe, is about $10 across my retirement account and this account for dividend income. But that doesn't mean it's necessarily $10 every single month. This month's been kind of a dead month, and I'll explain why. We're almost done with the month. We have about a week left, and all we've got is 3 payments. On April 4th, I got paid $1.32 from jepi. I got paid 7 cents from SGov, which is that bond payment I was just talking about. And then I got paid 53 cents from O Realty. jepi came in as our biggest payout with $1.32, and our lowest was SGov at 7 cents. However, to supplement this and give you a little bit more juicy dividend content, I do earn some dividends over in my Roth IRA retirement account. These update videos aren't about that account. I do a separate updates for those every quarter, every 3 months. But we're going to go over and look in what we got paid over there for April to help supplement this. Over in my retirement account, we're going to briefly go over here. I have VU, VYMI for international exposure, BND, Vici, CMG, SWBI, and Ford. I have a few positions in here for the long term. And here's what we got paid for this account. On April 4th, we got paid 73 cents from BND for 3 shares of it. We got paid from 21 shares of SWBI. We got paid $2.61 in a dividend. And then for 37 shares of the REIT Vici, we got paid a whopping $15.68 dividend, which is, I believe, my second biggest dividend of all time. My biggest was Ford. It was a double dividend because of a special dividend they paid, and that was around $20, I believe. But $15.68 from Vici is huge, and that got just reinvested right back into the Roth IRA. So I don't really count those usually because it's not part of my M1 portfolio. But at the end of the day, it is a dividend, and it is getting put on my monthly dividend income sheet, so it only made sense to share about the dividends over there. So combined with the Roth IRA of the about $17 of dividends from there and about the $3 over in this M1 Finances, I have $20.91 in dividends earned for the month of April. This puts us at $71.31 in dividends earned so far this year, which is amazing considering we are a third into the year. We are only in April. We are only 1/3 into the year. We are at $71 versus last year, the entire 12 months was $92. At this rate, our year-to-date total may be around $200, which would be double of last year and would be insane, guys. That would be so cool. But yeah, right now we're getting some of our biggest dividend payments of all time. Last month we had my biggest payout yet of $43.33 in dividends in 1 month. This month is really close with $20.94, which is still higher than my highest of last year at $17 last year. So we are on a good track. It was disappointing to see, only about $2 or so in dividends this month from the M1 portfolio. But that's the way it goes sometimes. This month I have about $2 earned, but if we look at my Div Tracker, we can see that we have a lot more money coming. If we go to Div Tracker here and we log in, well, I didn't think it would take this long. Sorry. Okay, there you go. All right. If we log in here, we go to M1 Dividend. We can see that the dividend portfolio alone makes $56 a year in dividend income, $4.71 a month, $1 a week, and 15 cents a day, or a cent an hour. And we make a 3.16% dividend yield, but with our buy-in costs, it actually is equal to 3.42%. And if we go to calendar, we can see what we plan to make next month. Looks like our monthly average is $4, and in April, looks like we made about $3, which made sense. But what do we have going on for May? So next month, guys, it looks like we could make up to $2.05, which is still kind of a low month, right? That's still kind of a low month for us. But if we fast forward to June, we see that we were on track to make $7 and $7 again in September. So there are just some months where you make less and some you make more. That's just the way it goes with dividend investing. You got to look at that big picture and not just every single little payment. If you just look at every single payment, 7 cents, that's nothing. You're missing the big picture. Don't do that, guys. Okay. So that is our updated Div Tracker. If we take a look back at that, we had some good numbers going on. And we can also see that if we go over to the combined portfolio between the M1 and the Roth, our annual dividend income goes up to $197.44 with $16 a month in dividends, $3 a week, 54 cents a day, and 2 cents an hour. Much lower dividend yield over on the Roth IRA account with 2.60% yield and 2.62% yield on cost. And overall, across all our holdings, it looks like we are about break even, not counting dividends, which makes sense, but dividends play a big role. Okay, so also let me know, guys, if you want in these update videos for me to include that Roth IRA dividend income. If not, I will keep it out like I have been in my past videos. This video is the first video I have brought that in to this extent. I think I do like kind of keeping it out, so I'll just briefly mention it unless you guys really enjoy that. All right. Lastly, let's look at all portfolio returns update. First, let's check back at the monthly dividend income here. I wanted to see here that, looking at these charts, see in March we had a huge blow up year with, blow up month with $43. April was $20. I really like seeing that explode there. And then we see here in April for 2024, it's that turquoise. You can see that we're really high on income there. It's really nice to see. All right, closing that out, wanted to look at and give you an update for the returns for all my portfolios. This gets updated every quarter, and I wanted to bring you guys in on how my portfolios are doing compared with each other. So if you guys follow the channel, or if you don't, let me explain here. I have 5 different investments. I have my Roth IRA account, which is my retirement account. I have my M1 dividends, which is my just taxable brokerage, which is the one I just updated you guys on. I have Bitcoin, I have gold, and I said 5, I mean 4. I have the S&P 500 here as a benchmark to compare. So we can see here that after this last quarter, S&P 500 stays on top. I'm not necessarily trying to beat it, but I do have it here as a comparison just to kind of see what how it compares, how my portfolios compare to the S&P 500. We can see that it went up about 2% here in the last quarter. We can see my M1 dividends really dropped down here with going from 22% all-time returns to 15%. We lost about 7% in the last quarter. S&P 500 went up 2%. We can see that in the Roth IRA, we lost about 5%, down 5% in the last quarter, from a 9% all-time return to a 4% all-time return. We can see with Bitcoin was up 3% on my investment. Now it is down minus 4.9. That's what it's gone under the zero here. Bitcoin is going down. We can see that gold is one of our biggest climbers. It tends to be when like Bitcoin's going down, when the market's going down, that gold goes up. More people want to buy a safe investment like gold. So in the last quarter, gold's gone up 6%. So we can see gold is climbing up. Gold has now shot up above Bitcoin and above my Roth IRA. So currently, gold is yielding me a better return than my Roth IRA and my Bitcoin on a quarter-by-quarter basis with not a lot of quarters inputted so far. So we will definitely see how this changes over time. I do not think gold will stay on top, but it is kind of cool that right now gold is giving me a better return than Bitcoin and my Roth retirement account. And at this rate, it will surpass the M1 dividends account for quarterly return. And I don't know if any of these are going to beat the S&P 500 anytime soon, but I think that gap will close, and we will get to see some possible close competition between the S&P 500 and my portfolios. So yeah, that's a little bit of updates on those. Gold's breaking through, the rest are going down. S&P 500 is almost stagnant for that last quarter. And yeah, guys, that is where we are at with my portfolio. We are, overall we are down. We're down 2% in the last month since the last video, but we are still up 15%. $29 in dividends earned so far. All our sectors are still up, which is really awesome, with our biggest sectors being industrials, restaurants, and grocery in the lead, and the lowest being bonds. Core, which is interesting, which is our main allocations, such as like schd, VYMI, jepi. Core is kind of staying still. Tech's kind of not up that much. Bonds not up that much. Our biggest winners are the industrial sector, restaurants, and grocery. So yeah, guys, thanks for tuning in, and go ahead and remember to hit that sub button, hit that like button. Show me you love my content. I appreciate the love. Appreciate if you made it this far in the video. just tune in for next month when we will see how we do, how we compare to the market, how we do on dividends, and just I'm gonna keep you guys up on this journey. Till next time, guys.